This is Property Taxes in the Age of Increasing Property Values, Part 1. There are 3 parts. An overview by McKinney, citizen-to-citizen.com, and we have a Facebook page. What we try to do is learn what we can about local government and explain it to people in a way that they might understand a little bit better than what we're getting from our taxing entities. What happens with our property appraisals, budgets, and tax rates are all part of a yearly cycle. One thing happens before the other things. Number 1, our properties are appraised starting in January for taxable value by the Collin Central Appraisal District, Collin CAD, and finalized around July. What they're doing is deciding what the market rate is, what's the going rate for a house, and then how much of that can be assessed. And they give those numbers to our taxing entities. When taxing entities get these totals sometime over the summer, they then plan their budgets and tax rates. We have 4 taxing entities: City of McKinney, McKinney ISD, some people have Frisco ISD or Allen ISD. There's Collin College, and then there's Collin County. Those are our 4 main ones, and our 2 highest ones I'll be discussing the most. That's McKinney ISD, that's about 64-65% of our property taxes. And then the City of McKinney is about 23-24% of our property taxes. Once the appraisals are known, once the budgets are known, once the tax rate is set, then we are taxed per 100 of assessed value. So as an example, if your assessed property value is $100,000 on Collin CAD, just to make this easy, you're going to take your assessed value, divide it by 100, and you get 1,000. That's how many times 100 goes into that number. And then each taxing entity charges their tax rate times that 1,000. And that's your taxes due for each of the 4 entities. And remember, even if you live in an apartment or you're renting, this is what's happening to the owner of the property. They're having this go on, they're having the values increasing every year, and many times have no choice but to pass that cost on to you. This is what is posted on Collin CAD's website. I just pulled it down. This shows the certified taxable values from last year, City of McKinney, all the cities. 12.71% increase. And our houses are now, they're saying the average is $300,000, and I know that's going to be going up for this year. And if you look at this number here, 9.01%, that's calculated year over year taxable value change for existing properties, and we'll be talking about that. That means these are properties that were there in 2016 and 2015, and it shows that's the increase in their values. Here's a question that shows that people are kind of stuck in the way things used to be, which was when the tax rates were stable and property values were stable. And we're just not in that time anymore. And so that's why we're getting this question. How can people keep saying that our taxes are increasing when tax rates are staying the same? And quite simply, it's that variable of our property values increasing. If taxing entities have more to tax, then it's an increase in taxes. And this distinction is very important, and that's why the truth in taxation laws that we're going to be discussing in part 2 and 3 are so important, is because our taxing entities have to let us know when our taxes are increasing, even when our tax rate is staying the same. And here's a perfect example of this property tax rate history for the City of McKinney. And these are all City of McKinney slides. Here is a very steady tax rate since 2008 all the way to 17, and you see it's a tiny little bit less right here. But if you look at property tax revenue is increasing, and that's not just from new growth, because new growth is only about 4%. Here's the information from McKinney ISD's yearly tax rate and revenue information. And again, this points out a simple fact that as our property values increase, so do the taxes collected. Even though McKinney ISD even lowered the INS by 5 cents last year, they still collected a whole bunch more than they did the previous year. And that's all because of increased property values. And as a matter of fact, it started in 2013 when we started coming out of our last recession. And the numbers just keep going up. And remember, this is our largest amount of our property taxes go to McKinney ISD. What does the state of Texas doing to help this situation? So we have on one side our appraisal districts causing issues, and on the other side we have our taxing entities causing issues. So what they've done on the assessment side is the state put a 10% cap on how high assessments can be each year. This is only for primary residence homeowners, and it's only if the homeowners fill out a homestead exemption. Then, no matter how high property values go, it's capped at 10%. Unfortunately, people who own rental homes or commercial properties cannot take advantage of this. So their assessments can go up however much the appraisal districts want them to go up every single year, and they will have no choice but to then raise rents, or maybe businesses go out of business. Here is just a sample of what you find at Collins Central Appraisal District. I just pulled up a random house because it's close to what this year's average home value is supposed to be. So, and here's the market value. Remember, the appraisal districts just look at market values. So whatever the supply and demand are, or recession, or in a building boom or whatever, it's going to be reflected in the market rate. Then there's the appraised rate, and there is the assessed rate. This is what our taxing entities use to tax us. If we look here, this actually, the past 2 years, this property has luckily had the cap. Otherwise, they would have been charged that much more on their assessment.